Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, March 20th, just a few minutes before the close. Well, Wall Street erased early gains today. The index has gained in early trading, but started falling late this morning, and now, as I speak, into the close, they are near their lows. Investors are now counting on further easing in the next few days as the Senate mulls a $1 trillion package that would include direct financial help for Americans. And on that note, let's move on to three charts that could give us some insight into the week to come. Oh boy. First of all, let's do as we always do. In this case, whether we want to or not, let's look at a chart, a daily chart of the S&P 500 spider symbol, as you know, SPY. Now, as I'm speaking here, and I captured this chart right before the close, the SPY is trading at $230 since the all-time closing high, and of course you all probably remember that was up February 19th. That all-time closing high on the SPY was $338.34. About 33.83 on the S&P 500 itself. Since then, of course, everybody knows the SPY has fallen. The S&P 500 have fallen. The SPY, as of right now, is 30% off its highs and certainly in bear market territory. Now, Wednesday, this past Wednesday, the lows on the SPY were $228. Or about 22.80 on the S&P 500 itself. Now, if we can find anything positive about this chart, let's go look for it, please. But no, if we can find anything positive about this chart, it is the fact here that if you stand back and look at it, the SPY has traded sideways, at least in a range for the past 3 days. Plus, we can find here, if we look at the RSI, the Relative Strength Index, we can see that it is actually trading in a bullish divergence, meaning that it has been moving sideways just atop the oversold line now at about 30 since February, the beginning of February, or excuse me, the end of February. So when the RSI is moving sideways, but the asset you're looking at is moving lower, that's called a bullish divergence because the RSI is saying here, hey, it's not as bad as it looks. Now, please don't use that as an excuse to jump in and buy every stock you see, but still, we'll take any good news here. I certainly will. So it's worth noting that the RSI, at least so far, in the past 3 days, and actually from the beginning of March, is moving in a bullish divergence. So for support on the SPY right now, we can take Wednesday's lows at 228. We can take that for potential support on the SPY. Now, overhead resistance sits up here at about 238. Let's see, where overhead resistance actually is coming down here like this. So it's coming down here. We can call it 245 for right now. And then we can look on up here to 271 where we had this big gap down, but then price moved back up to fill some of that gap before it fell back down. So little resistance here, overhead resistance at 271. Please know one thing though, as I scan through the indexes looking at stock charts, and I do that quite a bit, just one after the next, like maybe the S&P 400 or the NASDAQ 100. As I go through indexes looking at stock charts, I have seen signs of buying come back into the market in the last week. I'm not saying it's time to buy here, but I am saying that there are some buyers out there. Please remain calm. Please remember that cash is a position. And now, for now, we will sit tight, or at least I will, and see if the market can hold these levels in the coming week. And now on to our next chart. This is a daily chart of the QQQ, the Invesco QQQ ETF. As you all know, the QQQ represents the NASDAQ 100, a very important index in the stock market and the home of the big FANG stocks, Netflix, Facebook, Amazon, Apple, Alphabet, and so forth. Those are definitely market leaders. Now, as we can see today near the close, the QQQ is trading at about 173 here. It's certainly off its all-time highs, about 26% from the February all-time high at $236.98. So the Qs have fallen here at about 26%, certainly in bear market territory. Now, along with the SPY today, the NASDAQ 100 gapped open higher, but then again started falling late this morning and now is down at about its intraday's low. Still, we can again find some more good news here if we want to. The RSI, since right before the end of February, has been trading in a sideways move here, not falling down below oversold territory. We can see that for the last 5 days, the QQQ has traded in a consolidation here, albeit a fairly wild one with wild price swings. Still, it has done that so far. Now, so far my crystal ball's broken. I can't see into the future, but if the QQQ and indeed the SPY can maintain this sideways move for another week, at least, that will show that there are some buyers in here, and hopefully it can hold up. And there you can hear the closing bell in the background. So we do have this bullish divergence here. Again, not saying it's time to buy, but certainly somewhat of a positive statement. So we do have resistance up here at about 184. Let's keep an eye here at this. This week's low was down here at 169. So let's keep an eye on this range here and see if the QQQ can stay above it in the coming week. Now, our final chart today is a chart that we haven't looked at in a long time, if at all, the Global X Cloud Computing ETF, symbol CLOU. Top components in this particular ETF are Netflix, Shopify, LogMeIn, Coupa Software, and Akamai. Now, when I captured this chart today, right near the close, the CLU was trading at $13.30. CLOU, I should say, was trading at about $13.30. Now, it is down 15% from its January all-time closing high at $105.08. Excuse me, that number down 15% is clearly wrong. It's down quite a bit farther than that. But at any rate, I do want to tell you CLOU is a fairly new fund. It opened in April 2019. I am going to watch the CLOU in the coming week. And please know, I am not anxious to buy anything here, but I am going to watch the CLOU. It seems like a space that should stay reasonably orderly. I will watch it for a few days. Again, I'm not anxious to get in. I do see the RSI coming down here into oversold territory, just slightly dipping into it, and then pushing up here just barely above it at about a little over 30. So I'm going to watch the CLOU. Its lows here was down at price support at $12.36. If it can stay above $12 here for the next few trading days, if it comes down maybe a little more and then starts up, or if it starts up and looks like it has legs, as we say, I may add a small position, very small position, to my trading portfolio. Then if it continues higher, of course, I may add a few shares. We'll have to see. I'm not anxious here, but maybe just nibbling a tiny bit depending on the news we get next week. My initial protective stop will be a close below $12. That's what I call a no kidding around stop. I'm going to put in a hard stop with my broker. So again, if the CLOU can remain above $12.36 in the coming week, I may add to it. my position. Also, please know that I may exit that position at any time if the market gets a lot more ornery again. And now, please know that I have suspended my usual list of next week economic reports to briefly touch on the topics below. If you want to see a calendar of those economic reports, please go to toniturner.com, click on Education, and then click on Economic Reports. I thought for a change we could go over some points here in the trading arena. First of all, as you can imagine, I want you to please be very careful out there. Here's some points you may not have thought about. When you, first thing in the morning especially, when you see a short squeeze take the market higher, and you may not, if you're newer to the markets, may not understand that, but in the last couple of months, we've seen the market open dramatically higher one day and then only to maybe fall off and trade lower. Actually, today it did the same thing. It gapped up, not dramatically, but certainly gapped up and then started lower. When you see the market skyrocket higher first thing in the morning, a lot of that has to do with short sellers. We call them shorts. Short sellers, when the market starts higher and they are short the market, meaning they believe that the market will go lower, so they have shorted the market. They have sold shares, hoping these shares will go lower so that they can buy them back at a lower price. But when that doesn't work, when buyers come in, then the short sellers are losing money. They get in trouble as these stocks move higher. So they have to buy in order to exit their positions. Now that means that regular buyers are buying, the shorts are covering, and that will shoot a stock or an index much, much higher. Now know that after the shorts have exited their trades, for price to continue higher, new buyers have to come in and buy once that initial rally is over. So that can cause a lot of angst for new traders who don't understand how that process works and don't understand that patience can really, really save you some money in a market where this short squeezes are happening. So please know how a short squeeze works, at least to a degree, and know that we have to have new buyers to keep that move higher to continue. Also, please remember this. A lot of small losses can add up to a relatively large loss. I know it's very tempting when we see stocks a lot of times in the morning start up dramatically, and if you're an experienced day trader and you want to jump in, of course, that's certainly up to you. But if you're just jumping because some stocks are starting up and you're not experienced, and then all of a sudden it rolls over and you get stopped out, or worse, you stay in it and then it goes a lot lower, please remember that a lot of small losses like that can add up to a relatively large loss. So be careful just jumping in and out many, many times and maybe losing a little more than you thought. Now, right now, news about coronavirus, as you know, changes from hour to hour. Those news announcements can cause the market to spike up dramatically or fall down dramatically. Those are hard to read right now, so please keep in mind that what's happening right now may not be happening an hour from now. Also, please know that right now oil prices are definitely influencing the S&P 500. One easy way to watch the oil direction is to watch the United States Oil Fund. The symbol is USO. If you don't have access to the West Texas Intermediate Oil Futures, then you may want to watch the USO just as a kind of a guide to help you understand more. The USO is a fund, an exchange-traded fund that uses West Texas Intermediate Oil's futures contracts, an index of them for that fund to move higher and lower, and it does follow pretty closely the direction of oil futures, which is what everyone looks at. Now, it has got nothing to do with the price of oil at all. When you look at it, you'll know it's nothing to do with the price of a barrel of oil, but it does pretty much mimic the movements in oil futures contracts. So you can get an idea there of what oil is doing. Please, 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 you're going to hear people on CNBC, oh, I bought this today, I bought that today. Maybe you have a friend or neighbor who's a trader. I made $15,000 today. Please don't compare yourself to another trader. I've seen that over in the last 20 years, 20-some years that I've been teaching. I've seen, and I did it myself when I was new. I compared myself to what I thought other traders were doing. Please don't do that. It's a gigantic waste of your time. You don't have possibly the same goals that the other trader has, and believe me, that trader can also get hit pretty hard when things get rough. So don't think that you're not as good as other traders. Just please know what your experience level is. And on that note, keep in mind, please, that everyone should have as one of their top priorities. If you're in the market, your top priority, I believe, is to protect your capital at all times. That is our goal. If we don't have our capital, we're out of the market. So sitting on the sidelines, going to cash as a position can be an extremely wise thing to do. Please don't rush to get in. There will be plenty there for all of us when this market starts up, and it will start up, believe me. So please, 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 until next week, stay safe, stay healthy, keep green on your screen to the best of your ability. I'm Toni Turner, and until next time, this is the Market Now.